Today's Thanksgiving. It's November the 26th, 2020, but I did want to do a quick overview for our trading results for yesterday. That was Wednesday, November the 25th, 2020. We had a great day, and it was, tactically speaking, just about perfect because while the trading day didn't give us what we wanted, the results did. And it was largely due to our order entries, our fills, and of course adjusting, and the power of adjusting. So I know that this is small numbers here to see, but you can see the chart for the day. This is a 5-minute candlestick chart for the trading in the marketplace yesterday, November the 25th. That's a Wednesday. On the right are all of my buy and sell orders, and you can see the end result at the end of the day. I was using, ultimately, at the end of the day, the max capital, the most capital of the day, got up to as much as $32,000. I started with about $9,000, and you can see that I slowly legged into this trade over the day's time frame. So we'll just go through each one by one. This is my first trade right here of the day. We sold the calls. So right here is where we sold the calls. That's this trade right here. You can see it's a spread trade, so there's two transactions in there. But we sold the calls right there. About 9:37 Mountain Time, again, we came back down. We touched this bottom here. As we retraced back, we now sold the puts. So we put our put position in. Again, I was anticipating using about $30,000 in trading today, and so I legged in with this at about 1/3 of my available capital. So I put in about $10,000 here on these particular trades. So I've got the calls in, I've got the puts in. Some time goes by here now, and we start to really come back. Not only are we coming back to this resistance level, but we start to blow right through that. And so you'll see right here, at 10:45 a.m. I buy some insurance. So I buy, I'm just going to call that insurance. Actually went long one of these call options right there. Purchased it as insurance protection against the market continuing to move up against us. So I bought that insurance. Little time goes by, and we do retrace back down just a little bit there. That allows me the buying power now to be able to balance my trade back out, get a little bit more delta neutral on it, and right here we sold some more puts. So sold additional puts. Sold some additional puts down here. Okay. A little bit more time goes by, about noon hour here. You can see noon hour, 11:57 a.m. Market pushes back up again, and this is anticipating, in anticipation rather, of the Fed FOMC meeting minutes being released. And it did look like we were going to shoot higher and push through our call legs, so we went ahead and we closed. We closed our calls. Close those out. Close those out here, guys, at a loss. Close those calls out at a loss. And then you'll notice less than 10 minutes, 9 minutes later, right here, we reopened those. So we reopened the calls. The FOMC minutes came out, and that ramp up was pretty much all for nothing. Not a lot changed in the FOMC minutes, and we started to sell back off again. So we felt comfortable reopening those puts, and we did so. We reopened those calls right there. The day trudges on here. We're getting close to the end of our trading day. Now, I trade in the Mountain Time Zone, so for me the market closes at 2 p.m. And so you can see right here at about 1:11 p.m., I'm able to now start pulling those calls off and taking my profit. So we closed all of our calls, all out of our calls now at this point, closed our calls out. And then the last trade of the day was right here at 1:40 p.m., 20 minutes before the market closed. That insurance protection that I bought right over here still had a little bit of value in it, and I closed that. So I closed my insurance or my call. Close my insurance out. Okay, and then our puts that were in place, those were far enough away from the marketplace that we just allowed those. Right here you can see we allowed all of those to just expire on their own. No reason to pay a fee, no reason to pay a spread or a commission when they'll just expire fully profitable on their own. End result for the day, folks, again, ultimately got up in the day to about $32,000 was my capital committed to this trade. About a $1,675 profit. I've got fees and commissions. You always got fees and a commission of about $339. So the net on the day was $1,336 profit. How does that look for a day? Well, it's a 4.18% cash on cash rate of return, which is pretty darn nice if you annualize that out. It's a 1,524% APR. So a lot of times in our live trading room, we talk about this goal of just making 1 or 2% a day. This was a 4.1% for the day. But if you can make 1 or 2% a day and factoring in your losses, net 5% a week, 20% a month, 240% a year, and you don't need 1,500% a year rates of return. 240% a year would be an absolute knock it out of the park result. So all in all, guys, I was really, really happy with our day. Really happy, obviously, with the $1,336 of profit, but more important, happy with the disciplined way that we traded. We got a really good feel there on the call. We got a really good feel there on the puts. I love the fact that we were able to justify spending some of that profit on buying insurance, that we were disciplined enough to close those calls out before the loss got too big, that we were smart enough to re-enter those calls once we saw that there was no reason to have exited them, that we were disciplined enough to close out those calls prior to a crazy move there prior to expiration, and that we were finally able to close out our insurance and get something back on that day. So all in all, guys, really good trading day in our trading room.